But I would suggest that, certainly the banks are very net long gold and silver futures. And to the extent that the banks can peer or are part of what's going on sort of behind the proverbial curtain, they must see something that's inspired them to take a net long position in the precious metals.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with silverdoctors.com, and back with us today is Dave Kranzler from Investment Research Dynamics. Dave, thank you so much for joining us today.
Hey, it's my pleasure. Thanks for having me on again.
All right. Now, the first topic I'd like to discuss is the precious metal markets, because, boy, this is not a pretty day for precious metals. We're seeing them go lower. Silver's hitting a low below the low we just saw in August. But it seems like you're pretty optimistic, actually, regarding precious metals. You think they're set up, we basically have the most bullish setup that precious metals have ever had in history.
Yeah, well, I mean, it's the most bullish in terms of the way the Commitment of Traders report is structured, in terms of the speculative traders, primarily the hedge funds, are net short silver, and the commercials, which are basically the banks and then the entities that would use futures to hedge, like mining companies, so producers, merchants, processors, etc. So the commercial segment, trader segment, is net long, and they're net long for the first time going back to at least 1995. I mean, from time to time we see the banks get net long, and it's usually a signal that the market is bottoming out and it's going to move a lot higher. We've never seen the commercial segment net long. And so that kind of tells you that there'd be, if the non-bank commercial entities are prone to not hedge their exposure to gold and silver, well, in this case, silver, you would think that they have a really bullish outlook for whatever reason. So, and also, at least for as long as I've been doing this, going back to 2001, when the speculators, again, mainly the hedge fund trader category, takes an extreme position, either an extreme long position or an extreme short position, they're always wrong. So, it doesn't tell us anything about the timing of when this market's going to move higher again. But I would suggest that, certainly the banks are very net long gold and silver futures. And to the extent that the banks can peer or are part of what's going on sort of behind the proverbial curtain, they must see something that's inspired them to take a net long position in the precious metals. I mean, right now, like on a day like today, you've got the rest of the world, other than the U.S., seems to be melting down, and I think that's kind of affecting all of the commodity markets, and so gold and silver are going down in sympathy with that.
Now, how has the mining sector fared, in this very bearish time in the market we've seen over the last few weeks, really a month about?
Well, I mean, overall, the mining stocks are just getting obliterated. I mean, the sentiment, investor sentiment toward the mining stocks is as bad as I've ever seen it in the last 17, 18 years. It also kind of depends on what you look at. So, for instance, the Huey index, the Amex Gold Bugs index, which is large cap mostly gold and silver producers, but there's also copper producers in there now. That thing's below where it was when it bottomed out in 2008. But if you look at the GDX, that's not getting beat up quite as badly. It's a more broad index of gold and mining producers. And then the GDXJ, which is, again, I don't look at that as being juniors, because it's the stocks that make it up or have a larger cap than what I would consider to be juniors. I look at juniors as mainly being exploration stocks. That's also getting beaten up pretty badly. But there's a lot of individual stocks out there that are performing pretty well. And, the ones that are the juniors that are finding bona fide discoveries, and I cover a few of them in my mining stock journal, are actually performing pretty well right now, despite what's going on in the rest of the sector.
Now, you talked about how it seems like the rest of the world, besides the United States, is not doing that well. I mean, especially in emerging market countries, there's a lot of currency crises happening. And I was just interviewing John Rubino last week, and he was saying these emerging market currency crises could be the catalyst for a collapse, and that really we could see it come all the way back to the United States and affect the United States. What is your perspective on that?
Well, first of all, I want to say that, the perception out there might be that the United States is doing a lot better than the rest of the world, but I would disagree with that. I would say that the people who are benefiting from the extreme asset inflation that's been created in this country by the Federal Reserve and the U.S. government, they're doing well. But you're talking about, the upper 0.5% to 1% of the population. If you look at 90% of the population, their wealth and income is shrinking. Wages are declining now. Wage growth has been declining. The fact that the U.S. government has to issue, they're issuing debt right now at a run rate of $1 trillion to cover its spending deficit. That tells you the U.S. isn't doing well. If the U.S. was doing well, it wouldn't have to issue debt to cover its expenses. So, what's saving the United States is the fact that the dollar is the reserve currency, and that's why a lot of these emerging markets are melting down, because the governments and the companies within these countries have issued a lot of dollar-denominated debt. And as their currency falls, they have to scramble to buy dollars in order to make payments on their debt. And it becomes a self-feeding process where the further their currency falls, and for the governments, they have to print currency to buy dollars, and that drives the currency down even more. Well, some of these countries are some of the United States' largest trading partners, like Brazil and Argentina. And at some point, it has to infect our markets. We saw the same thing in 2007. Saw the same thing all during the 90s. There was a rolling series of emerging markets crises, and that's one of the reasons that Alan Greenspan printed so much money and fomented the dot-com bubbles. So these people who think that what's going on in the world around us isn't going to affect our markets, well, they've got their head in the sand.
Definitely. And, as we're talking about how the U.S., a lot of people are saying it's doing well, but you beg to differ. You've talked a lot about the stock market and how it just keeps going higher, and this doesn't make sense. And that really we're going to have to see one of two things. We're going to have to see long-term interest rates rise, or the stock market will have to fall. Can you expand on that?
Sure. Well, again, if you're talking about the stock market, the stock market, the broad stock market isn't necessarily doing well per se. Something like at least 50% of all the stocks in the New York Stock Exchange, which, I don't know, something like 2,600 stocks, are below their 200-day trading, their 200-day moving averages. Really what you've got going on right now is you've got just a handful of stocks that are driving the NASDAQ and the S&P 500 and the Dow higher. I had dug up some interesting statistics for my latest short sellers journal. Here we go. So like in the month of August, Apple was up 20% and Amazon was up 13%. And combined, they were responsible for 25% of the performance in the S&P 500. So, again, it's basically, especially because of the way the market's structured now around passive index investing, again, it's another one of these things that becomes a system of self-fulfilling prophecies where, people see Amazon and Apple going up and they throw money into these passive ETFs. And as the market cap of Amazon and Apple increase relative to the rest of the index, more of that money going into the index, into the index funds, has to be funneled into Apple and Amazon. So you get to the point where, and there's a few other stocks in there, Microsoft, Netflix, et cetera. And I mean, it gets to the point where these stocks keep going higher just because they're going higher. And I mean, that's the absolute classic definition of a bubble. And that's where we are. I mean, you look at Amazon today, it's up almost 1.5%. It's up 29 points. Fox Business has this stupid little Amazon.com bug in the corner that shows every tick in the stock. I mean, it's like Amazon has become a glorified icon in the financial media.
One last topic I'd like to discuss before we let you go is the Cavanaugh hearing today. The confirmation hearing is underway. And really what's happened is there's been a lot of protests. There's been actually 22 people arrested. What is your perspective on this? Like kind of the political turmoil we're seeing around Cavanaugh's confirmation?
Well, I got to be honest. I have kind of learned to tune out this political kabuki theater that's going on in Washington, D.C. And I think that the turmoil, that's surrounding the Cavanaugh confirmation, everything that's going on regarding the Russian meddling conspiracy, et cetera. I mean, I think it's kind of a derivative of the underlying collapsing system. And I think it reflects agitation in the masses because they're starting to feel squeezed economically. And obviously the country is becoming more and more polarized, and the polar ends are becoming a lot more vocal and in some cases violent. And I think that, for me, all it does is merely reflect the symptoms of a collapsing system.
And I guess just another reason to be bullish on precious metals.
Absolutely. Again, my fear is that, the event or events that trigger the massive move in gold and the repricing of gold and silver that we know is eventually coming. My fear is that event or events is going to make things around, in the United States unpleasant for everyone, whether or not you own gold. But I do think that if you are trying to give yourself and your family a shot at seeing the other side of what's coming, I think you do have to own a lot of gold and silver and get as much of your money out of this financial system as you can. Because this thing's going to collapse at some point. And again, I don't know when. And people might say, oh, well, he sounds like a broken clock. Well, guess what? A broken clock is right twice a day.
Right. And just kind of coming full circle here, getting back to how you were saying precious metals seem set up for big move higher. And it really, it's more bullish right now than it's ever been in history. You're talking about how this setup is really, in the article you recently posted, you said that this setup is really coming together just as we're going to see reinforced seasonal buying from India and China.
Yes, that's correct. I mean, I think your audience probably well knows already that the third and fourth quarter, well, really the last September and then the fourth quarter of the year is that's when India buys the most gold. That's when they have their wedding celebrations and their holiday festivals, and pretty much September through December is when the greatest percentage of the gold that they import into India is imported. And the same thing with China. So, and we're also, layer on top of that, which is something we haven't always seen, is Russia's stepped up its gold purchases. And a lot of other countries, like I've been reading articles about how the Iranians are buying a lot of gold. So I do think that there's, a continued and accelerating movement toward converting fiat currencies, all flavors of fiat currencies, into precious metals, although it's mostly occurring in the Eastern hemispheres.
All right. Well, David Kranzler, thank you so much for joining us today. Before we let you go, did you want to share with the viewers where they can find you and any last thoughts you had?
Sure. My website is investmentresearchdynamics.com, and I try to post commentary on there, at least every other day if I have the time. And then there's also links to my mining stock journal and my short sellers journal at the top of the website. So, in terms of the listeners who are kind of on the fence now about whether they think they're right or wrong about gold and silver, my advice would just be to look around you and see if you think that, your own and everyone around you's economic condition is improving. And if you think that's true, then you may as well just sell your gold and silver and buy Amazon. But otherwise, just sit tight and be right.
Sounds good. Dave Kranzler, thank you so much for joining us today.
Thank you.